Hi, I'm Doug Jones at Mortgage Magic, and the title of this video is I Can Beat the Banks. I'm a mortgage lender, and I can beat the banks. And I'm going to tell you why, and I'm going to tell you also a disclaimer. Now, disclaimer is there's 4,500, a little bit more than 4,500 banks in the United States. I'm sure sometimes some bank out there is going to beat me with 4,500, but I can, for the most part, beat the banks. And the only time really I can't beat a bank is if the loan is a jumbo loan. That I won't even try to compete with the banks anymore. And two, if there's a thing called hypothecation. So a person has $5 million in a bank and they want to borrow $2 million in a mortgage. Well, they say, we'll take that $5 million and we'll pledge it. So if there's ever a delinquent, you can just take the money and pay it off from that money. That's called hypothecation. That's a different situation. But I can beat the banks. I'm going to tell you why. First of all, let me tell you about the rates today. Today, they're the same basically as yesterday. The rates have been going down recently, and the 30-year fixed today from mortgage-backed securities is 7.11. This is exactly the same it was closing yesterday. Today is December 5th. The FHA is 6.51, and the VA is 6.52. Now, loan limits are changing January, and so we got the new loan limits. The conventional loan, that's the Fannie and Freddie, and those limits are 766,550. Then there's a high balance of 1,148,000. What the difference is that this 711 is about this number here. The 711 is for the lower conforming number. So if you go up to this here, you're going to be up about 0.5% or maybe more. So just realize that that's true of all these loans. This number represents the lower number. The VA is 766,550, and they'll go to $2 million. VA goes higher than other lenders. And then the FHA is 766,550, and again, 21148. FHA got an asterisk because they are limited by county. I'm in California. I'm in a very expensive county, Santa Clara County, and that is our limits here. Now, if you go to Central California, those limits may reduce by as much as $200,000. Now, the reason I say I can beat the banks or meet the banks is because really I don't make the loan. Bank of America doesn't make the loan. Wells Fargo doesn't make the loan. Chase Bank doesn't make the loan. Those loan limits, all these, let's take conforming loans. Those rules are written by Fannie and Freddie, Fannie Mae and Freddie Mac. That's who writes the loan rules. That's who sets the loan rates. Bank of America's got to sell that loan to Fannie or Freddie, and we've got to sell that loan to Fannie or Freddie. And then there's a margin in between about how much Bank of America wants to make or how much Mortgage Magic wants to make. So I'm willing to beat those banks in every case. But again, if you're complaining about a rule that has nothing to do with me, has nothing to do with Bank of America, has nothing to do with Wells Fargo, those rules are made by Fannie and Freddie, and they're made by FHA and VA. So those are really the lenders, and those are the people who buy the loans. And the other banks make the loans, they sell the loan, they get a servicing fee on the loan, and they get a fee when they make the loan. So today the loans are sold immediately. Back when I started banking a long time ago, banks kept the loans. But this way allows the banks to make more loans, get more money out because they're selling it right away. Again, I choose to beat the banks because I can beat the banks. I got the same lending rules they have. I won't compete in the large jumbo loans, even though before the crash, I did an $8.5 million loan, probably bigger than any residential loan in California at that time. But those rules have changed since the crash back in 2008. They've changed. But Fannie, Freddie, FHA, VA, they all make the loan rules. We follow the loan rules. We get the loan to them. We sell the loan, and I can beat the banks.